timeframes. I've talked about this today. I've put out another video. I've got Ethereum, Bitcoin, the crash that's going on across the market. Go and check out those videos. They'll really help identify and understand where we are in the cycle. Cardano, I've done the same thing here using this, which I've done on Bitcoin and Ethereum, like I just said. We're measuring ranges, lows to highs, highs to breakouts. Now, this broke out on in November, but I mean, it's a breakout technically because it broke the high, but I want to see the market actually take off, close above that level to confirm this is the time that we're moving. So that time frame was around 22 weeks to this bar, which again increased volume, or 17 weeks to this bar, which was huge volume, broke. It pretty much just held up at 15 cents and then finally broke those highs at 20 cents. And then from there, it took off. That was it. We haven't seen a 20-cent Cardano ever since. Gone. So 22 weeks. I'm bringing that up because we have a low to high, 20 weeks. High to breakout, 22 weeks. Low to high, 22 weeks. That week, I was talking about selling some Cardano, not all of it. And obviously, you know, I got rubbished for selling Cardano. Why would you ever sell it? Yada, yada, yada. I assume most of these people came in on these weeks where they were buying Cardano at 60 or 70 cents, probably 90 cents, $1.50. They'd only doubled their money and they were wanting these huge gains, which a lot of current channels will talk about. Cardano has gone up, how many percent's this? 8,000% from the low, and you know, we could expect another 8,000%. Doesn't happen like that. And so all they had seen was about 100%. And so they're saying, no, this thing's got to go up more. It doesn't. Timeframes can really help you identify when we should expect another breakout. The other thing with these timeframes to do is to break them in halves. So 12 weeks, break it down to 11 weeks, 10 weeks, around there, because as the market speeds up, so do the timeframes. People coming into the market start to get less patient, and they'll start to buy up these lows quicker and quicker, and then the market continues to shoot up faster and faster until the narrative changes and the market falls the other way. If you want to learn more about this, join the 12-month membership Investor Accelerator course down below. Link is there. Discounted price is still on till the end of this week because you guys have been emailing me and messaging me asking if you can have that at that lower price before the price increases. So go and check that out before it goes up this weekend. So this is what we're learning here. 50 weeks from bottom to top. That's that range here. So that's a year. Dead on a year. That's pretty cool. Well, you know, 2 weeks short, so let's call it 50 weeks. I've got this here because if we scroll back, we can see it does major moves over the course of a year as well. Top to bottom, 48 weeks. Major top to major bottom, 49 weeks. 48, 49, 50 weeks. Cardano likes to do these time frames. Now we're in a bull market, not a bear yet. We're in a major bull market. It wouldn't surprise me if we saw a little bit more sideways action, maybe a bit of a dump to take out some of these weekly lows. So these are the weekly bars. And if we take out this low of 95 cents, there's quite a lot of drawings there. I'll take those off. So we got a low here, 15th of March, 95 cents. If we took that out to test it and came back to that sort of, wow, that could be low, 60 or 70 cents. Let's say, firstly, we'll try the 80-cent level. Let's not get too ahead of ourselves. That is also possible, but it's still in an accumulation wind-up period in my books. So it's not a bad thing. It just clears out some of the people who are just waiting to sell. Any sort of panic, they drop their coins, they drop whatever it is they need to drop. That all gets scooped up so that we form a strong foundation and we can move up without weak hands holding. Because sometimes these are the people who are wanting to sell out, or you know, they just don't know what's going on, and they'll sell it $1 or $1.10 or 70 cents after we've been accumulating so long. If they're the ones holding, they probably bought at $1.20 or $1.50, and they're just waiting for that price to get back up to $1.50 to sell it again. So that could be the two different scenarios. We drop, they sell, or we hit $1.50 and they sell. That's why we'll see big volume at these lows. Maybe we see a minor double top and they happen to sell as well because they just can't stomach holding something for 1, 2, 3, 4, 5, 6 weeks. Maybe we get there on the 7th week and they're holding it and they just, nothing's happening. I've bought this thing, nothing's going on. They just have to get rid of it. That causes the market just to fall back for a brief period of time until all of the weak hands are gone. Then we move again. So time frames, we are looking pretty all right. So we've done about 6 weeks. 8 weeks leads us into another next week and a half from now. I've got 8 weeks because we've seen these sort of patterns play out, and I'm just using half time frames, so 17 weeks from the low to this first high, and then 29 weeks to the price high. So I've got one high here because the market didn't really go above this first high. So this first high was at around 10 cents, and then it only moved to about 11.5 cents. So it barely went above it, didn't close above it. So I really consider this as the major stopping action. This stopped the market because the market couldn't move anymore. So that's why I still measure both to understand the time frames. 12 weeks down, 5 weeks up. So we had another big move here, 12 weeks down. And what am I looking for here? Potentially sort of 8 to 22 weeks. It's quite a big time frame, but that's the way it works. You've got to just measure them, keep it in mind, see what's going on, and then understand what it is that could potentially come up from this point and how long we have to go in that move. So again, with these 22 weeks, I might break those down as well. 12 weeks down, 20 weeks up, 22 weeks up, half of 20 and 22, you know, somewhere around 11 weeks, 12 weeks. If this is all starting to sound like a bit too much, don't worry, just practice it on charts or on markets that have some data, and you can start to work with these numbers and you'll see patterns continue to play out. So 11 weeks, if we measure that from whichever low comes in, currently it's this low, boom, we move it up from there. 11 weeks from this top to top breakout gives us somewhere around May. So we've got a few dates to play with here. That's why we're still looking at this as accumulation on Cardano. Maybe we'll get some fake outs, some breakdowns. Maybe that's just good buying opportunities. I'm looking at a 50% level of 80 cents. So this is the price targets now. Take that off log. Major low to major high. 50% level is the 80 cents. If we don't make it that far, which is quite down there, I'll use the fib. So I'm just going to grab this fib under all of those tools. Look, somewhere around these levels, because this was the next breakout period. So I've got a low here, and that brings us to about 83 cents. So it doesn't really make too much difference whether it's at this low or this major low. The 85 cent level is the 50%. Now the 61 is at around $1. We've tested that already, but we're not seeing any volume come in either. Volume is another big thing here for Cardano. And so piecing that all together, we have our time frames, we have our prices of potential areas that it could come back to and not scare us out of a position, because it's all part of Fibonacci sequences and Gann theory. We got the time, we got the price, and the volume. So the volume is dying out. We need to see some volume come back in order to push this market up. And so we look back, we can see we saw big volume come as it began to break out of these tops in July. Big volume breakout above these highs, big volume into the high, and that has now stopped the market. We saw lowering volume, still big volume, but this was the Coinbase week, nothing. And so we need to see that volume come back to push this market. We could climb up on low volume and then break out on high volume. So we need to see these three pieces come together. And that was the point of this video, is to explain where we are at, what potentials we could see coming up to the downside or the upside. And if we actually get a solid breakout, I want to see volume, and it could take a few weeks if it plays around like it does on Ethereum. So we got a breakout here on high volume, but it took another 1, 2, 3, 4, 5 weeks before it closed above it. So that's another thing to keep in mind. They're all the factors coming into a trade on, well, this is on Cardano, of course, but you can use this across any other market that has data. Now, if you don't have enough data, this isn't going to work, and those are highly speculative plays. But we're looking at Cardano today. Thank you once again for joining me on another video. I hope you enjoyed that and you found some value from it. If you did, hit the like button, subscribe to the channel, bell notification icon. Join me on Instagram and Twitter, daily Q&A on Instagram. Join us for polls and news on Twitter. Investor Accelerator course going up this weekend. Get a link to it down below in the description before the price increases. That's it from today's video. Thank you once again, guys. I'll catch you at the next video. Enjoy your altcoin gems and your pumps and your dumps. Remember, your funds are safe, and I'll see you at the next video. Until then, have more fun to get more done.